studying your last two. I swim med when turned in. The styrene down to mute. And can lend a pole that sunk he died.
When a corporation pays dividends to shareholders, the process does not end when the money is distributed. The corporation also has an important reporting responsibility. This slide shows the complete journey from a dividend payment to year-end tax reporting. The process begins when the corporation declares and pays a dividend. Once the dividend has been approved and distributed, the shareholder receives the funds. At this stage, the cash transaction has occurred, but the reporting process is still ahead. The next step is the preparation of a T5 slip. A T5 slip is an information return used to report certain types of investment income, including dividends paid to shareholders. The corporation prepares this slip to document the dividend amounts received during the year. The T5 slip contains important information, such as the shareholder's identity, the dividend amounts paid, and whether the dividends are classified as eligible or ineligible. This information is essential because it helps ensure that the dividend income is reported correctly for tax purposes. After the T5 information has been prepared, the information is submitted to the Canada Revenue Agency. This allows the CRA to maintain a record of the dividend payments and match the information reported by the corporation with the information reported by the shareholder. The final step occurs when the shareholder prepares their personal income tax return. Using the information from the T5 slip, the shareholder reports the dividend income on their return. This reporting system serves several important purposes. It reports dividend income to the CRA, identifies the shareholder who received the income, supports accurate tax reporting, and allows the CRA to verify that the information reported by both parties is consistent. Think of the T5 process as a communication bridge between the corporation, the shareholder, and the CRA. The corporation reports what was paid. The CRA records the information, and the shareholder uses the same information when filing their personal tax return. This matching process helps improve accuracy and reduces the risk of reporting errors. The key takeaway from this slide is that dividends paid during the year generally create information reporting obligations. Preparing T5 information returns is an important part of the dividend process because it helps ensure that dividend income is properly documented, reported, and matched between the corporation and the shareholder. As we continue through the T5 reporting process, it is important to understand that two different forms are involved: the T5 slip and the T5 summary. Although their names are similar, they serve very different purposes. Let's start with the T5 slip. The T5 slip is prepared for an individual recipient. In the context of dividends, that recipient is typically the shareholder who received the dividend payment. Each shareholder generally receives their own T5 slip showing the information that applies specifically to them. The T5 slip contains details such as the shareholder's name, the amount of dividends received, whether those dividends were eligible or ineligible, and the identification information needed for tax reporting purposes. Think of the T5 slip as the shareholder's personal reporting document. It tells the shareholder and the Canada Revenue Agency exactly what dividend income was received during the year. Now let's look at the T5 summary. The T5 summary serves a different function. Instead of focusing on one shareholder, it summarizes the corporation's entire T5 filing. It combines the information from all of the individual T5 slips and presents an overall picture of the reporting activity. The summary includes information such as the total number of slips prepared, the total dividends reported, filing information, and details about the corporation that is submitting the return. The flow shown in the center of the slide illustrates the relationship between these two forms. Multiple T5 slips are prepared for individual shareholders. Those slips are then combined into a single T5 summary that is submitted to the Canada Revenue Agency as part of the corporation's information return filing. A simple way to remember the difference is this. The T5 slip focuses on the individual shareholder, while the T5 summary focuses on the overall filing. Every shareholder receives their own T5 slip, but the corporation generally files only one T5 summary for the reporting year. Understanding this distinction is important because both forms are required parts of the reporting process. One provides detailed information about individual recipients, while the other provides the CRA with a consolidated overview of the entire filing. The key takeaway from this slide is that the T5 slip and the T5 summary work together. The T5 slip reports dividend income for individual shareholders, while the T5 summary reports the corporation's complete filing to the CRA. Together, they create the reporting framework that supports accurate dividend reporting and tax compliance. Now that we understand the purpose of the T5 slip and the T5 summary, let's look at the complete year-end filing process from start to finish. The first step is reviewing all dividends paid during the year. Before any reporting can be prepared, the corporation should verify the dividend payments that were made, confirm the amounts distributed, and ensure that any eligible or ineligible dividend designations have been properly documented. Accurate records at this stage are critical because every later step depends on the quality of this information. The second step is preparing the individual T5 slips. A separate T5 slip is generally prepared for each shareholder who received dividends during the year. Each slip reports the shareholder's dividend income and the relevant tax information associated with those payments. The third step is preparing the T5 summary. This document combines the information from all of the individual T5 slips into a single filing summary for the corporation. The summary reports the overall totals and filing information that will be submitted to the Canada Revenue Agency. The fourth step is filing the T5 information return with the CRA. Once the slips and summary have been completed and reviewed, the corporation submits the filing through the appropriate reporting process. This allows the CRA to record the dividend information and match it against shareholder tax returns. The fifth step is providing copies of the T5 slips to the shareholders. Each shareholder needs a copy of their T5 slip so they can accurately report the dividend income on their personal tax return. The sixth and final step occurs when the shareholder prepares their personal tax return. Using the information from the T5 slip, the shareholder reports the dividend income and completes the personal tax reporting process. Notice the filing deadline highlighted on the slide. Meeting reporting deadlines is an important part of compliance. Late filings can create unnecessary complications and may expose the corporation to penalties or additional administrative work. Also pay attention to the professional tips shown on the right side of the slide. Before filing, it is important to verify dividend amounts, confirm shareholder information, ensure that eligible and ineligible dividend classifications are correct, file the information returns on time, and retain supporting documentation. These procedures help reduce errors and create a clear audit trail if questions arise in the future. When viewed as a whole, the process follows a logical sequence. Review the dividends, prepare the slips, prepare the summary, file with the CRA, provide copies to shareholders, and then allow shareholders to report the income on their personal tax returns. The key takeaway from this slide is that accurate T5 reporting benefits everyone involved. Proper preparation and filing help ensure that the corporation meets its reporting obligations. Shareholders receive accurate tax information, and dividend income is reported correctly throughout the tax system.